Welcome to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today, Cash Converters, they're back, ASX code CCB, talking with Sam Budiselik. He's the Managing Director on their full year results, which have been very positive. Hey, Sam, I got the name right this time.
Hi, Kerry. It's nice to see you. I feel we're getting to know each other a little bit now. I appreciate that.
No worries. Well, I think you must be pretty pleased with these results. Just explain to the market, there's a market out there that some are shareholders, some are not, but how have you done in these full year results?
Yeah, look, I think if you think back to this time last year, we're entering a quarter of lockdowns over East. It feels like a long time ago, but it was captured in the start of the financial year. We lost the Eastern Seaboard for 3 months, about 24% of our store trading days in that first half. So
Wow.
we had a pretty tough start to the year, but the full year result, I sort of see this as a bit of a watershed year for cashies because I think the work we put into our tech platform really helped us survive that period. But now we're really moving forward, growing revenue and earnings again. So we've had a really strong year. I mean, our revenue up about 20% and our EBITDA about the same. It's dropped out a really strong underlying result. So we're in good shape. And I think 23 is that year where we're back to feeling like it's going to be a good normal growth year again.
Oh, well, that's good to hear. You said before that lockdown did hurt you a little bit, the stores closing, etc. Did you spend that time focusing on, I guess, the technology behind the platform and what you're doing with that? Because a lot of people got a bit more tech savvy during lockdown.
Yeah, absolutely. I think it was fortuitous that we had the platform in place. Like I say, it was more about business continuity for the first quarter. We then moved to growth mode online. And our turnovers remained elevated online. So about 15% of our retail turnover happens online now through our web shop. And that's someone buying an item from a store still, but us dispatching it. So you can wander into the store and see it locally, but if you're in another state, you can view a watch or some jewelry or an item and have it delivered. So I think 15% turnover there is really quite strong for our model and probably not recognised.
Yeah.
About half of our lending flow is occurring online. So we've got a really good lending site that we've had in place for about 2 years now. It's a bit more mature than the retail site, but that's working well. And then probably about 20% of our pawnbroking payments are coming in online too. So our customers have really moved online, but do still love the store experience. And the stores are still a really important part of our network.
Why is it that the stores are such an important part of the network? Because we have seen a bit of a shift away from that sort of the stores. I mean, I personally like going in store. You know, I could do click and collect from Woolies. No, prefer to go in store, spend more money that way. Why the stores are important to cash converters, or as you said before, cashies. I like that.
Yeah, that's how we think of ourselves as a family here. Yeah, look, I think if you think about our unique retail model, we're procuring our inventory from people who are selling to us. We're not wholesale procurement sort of operation. So the store enables us to have people come in and sell items that we can then resell on the retail side. The store is really important for our finance customers. Being able to give a bank-like broker service at the counter to a person who has a need, assessing that need and offering the most appropriate product. It's like a bank transaction in store.
Okay.
So we've got a couple of different business lines contained within that store under that roof. And often we've got people wandering in looking for if it's a drill, and then realizing, we've got a great range of jewelry and watches. So it enables people to browse and move through our business and cross over from one product set to the other. So the customer relationship part that we take so seriously, and we have 60 plus NPS as a result of that strong customer relationship, you don't get with an online only business. You really get that through that store process. So we'll have a lot of customers buying online. Through Gumtree, might find an item, be surprised it's at Cashies. It might be down the road. They might wander into the store. It happens a lot. We win a lot of new customer business through those channels. So it's a real differentiator for our secondhand business in particular.
Where's the growth coming from? I mean, let's just go back. We're talking about the full year results. They've been very positive. Where do you think the growth is coming from, Sam?
Yeah, look, our loan book grew about 20%. So we're seeing the need for credit starting to normalise again as people are travelling and spending. Cost of living pressures are increasing. Obviously, we're all aware of the fuel price costs. And I think if inflation's running at 6%, transport might be 10% inflation. So you can really see the core cost of living pressures that our customers in particular experience starting to drive that need for credit. And I do think the retail side of the business is interesting in a rising inflation environment. You get more of a middle base of customer across the market coming into our stores, cost conscious. Might consider a secondhand iPad now for the kids for school, as opposed to a new iPad. Everyone's under a bit more pressure, and we win a lot of new customers in an inflationary environment as well. So, we're a unique business in that respect. When you look at maybe like the bigger retailers thinking the consumer spending might drop towards the end of this calendar year, we forecast our retail trade to continue increasing. So we're counter-cyclical in that way. And I think if you look forward over the next 2 or 3 years, we're really well positioned in that respect.
Okay, so when you say, let me just go back to the stores. You were just talking about customers coming into the stores. How many stores do you have? Are you looking, and are they just within Australia looking to expand? What's the strategy behind the stores at the moment?
Yeah, in Australia, we've got 150 stores, there or thereabouts, a little less than half still franchised. And we think that we can probably grow that store network sustainably to about 200 over the next couple of years. We've got smaller store concepts where we can go into higher lease cost areas now and access new customers with the more prestige secondhand inventory. Secondhand, watches, the Rolexes, the Breitlings, jewelry, handbags, that sort of stuff. So there's a big luxury secondhand trade market. But that 150 can go to about 200. Unusually, maybe we've sort of looked at Kmart with a similar store number, and where Kmart stores are and our stores are, we do well, similar sort of customer set. But there's, a bit more science behind it than that, but it's an interesting observation, I think.
And Sam, what pricked my ears up was, for me, and I'm not talking for all you out there, but I'm just thinking for myself, is that sort of brand, secondhand branded merchandise. Would you look to, I guess, have a sub-brand from Cash Converters and call it, I don't know, Cashies Elite or something? I don't know.
Yeah, we have toyed with that idea. I think the Cashies brand is so well recognised after 35 plus years of marketing and promoting and establishing on the high street. It's really, it's something that resonates with our customers. As we start to grow into new segments and maybe with customers that wouldn't normally consider Cashies, it's something we do consider. In Clarendon Street in South Melbourne, for example, we have a smaller Cashies store, but when you walk in, it feels like an Apple shop. So What we've done initially, we've sort of taken that move to refurbish and get a bit smaller and higher value inventory in those inner city locations. And the quality of the fit out, it's a beautiful store, and I encourage anyone that could get there to go in and have a look, and we'll see more of them over time. But I would like to continue investing in the Cashies brand and take it to a wider market. We'll see over time how we go. In the UK, where we have got 200 odd franchise stores, branded Cashies, or Cash Converters, I should say, there are some prestige jewelry type stores we're piloting. And it's early days, they're trading very well. So we might bring that concept down and have a luxury secondhand brand in market. But at this stage, we'll remain true to the Cashies brand and invested in the Cashies brand.
You talk about the franchise over in the UK and having about 200 stores over there. Would you look to the US as well? Because you mentioned it earlier, everyone's talking recession, inflation, and all this sort of stuff. I would have thought that this type of environment would be very good for a business like Cash Converters.
Yeah, look, offshore, we've got 600 odd stores in predominantly through Europe and South Africa, New Zealand. So we operate master franchise arrangements to partners that operate those store networks, and it's really proven the model works very well. If anything, I think before we were to expand into new territories, we would look at possibly acquiring some of those operations. As an example, they're our stores run by partners. We've got partners that have been in our business for a long time too. So, as people look to sort of exit or retire, there are opportunities for us to acquire more of that global network. But absolutely, I think if you look through Southeast Asia, where we're in Singapore and Malaysia in a small way, Indonesia, Vietnam, these markets are trading markets, and they're secondhand trading markets by, generational, delineation. So
Absolutely.
our model would work really well there too. And China, for example, I mean, if you think about a big pawnbroking market, it's probably the biggest pawnbroking market in the world.
Wow.
We could go, but we're doing things in a very measured way. And I think we're just fortunate to have such an opportunity in Australia where, adding another 50 stores in Australia and executing that in the right way is something we would remain really focused on. But yeah, look, heaps of opportunity globally over time.
We've spoken about the stores, but the last time you and I spoke, Sam, we talked about some new product offerings. I think you've now launched Pay Advance. Can you talk us through that, where that sits within the portfolio of cash converters?
Yeah, we've got a Pay Advance product. It really was designed in relation to a response to the buy now, pay later sector that's unregulated. It's grown to, I think the last numbers I saw, turnover is about $12 billion annually in that sector.
In buy now, pay later?
Just in Australia. So if you think about that being a big displacement of what traditionally was regulated credit into an unregulated space, we've been very vocal about recommending, particularly to the new government, that the sensible sort of protections that are in the responsible regulated space are extended. But, if that was to happen, that would cause a big rebasing of that sector. Not, if you have a responsible overlay, I can't believe $12 billion of outgoings in that space would all be deemed responsible. So it opens opportunities for us to bring our regulated product sets in and to serve customers in a safer way and a better way. Pay Advance.
Sorry to interrupt you, Sam. How is Pay Advance different from buy now, pay later?
Look, pay Advance, it's a simple 5% fee product. If you borrow $100, you pay back $105. So it's a low cost option for people, we think, to come into our business and to meet our business and to then be taken care of. Now, the main problem that spawned the creation of the product was looking at people's bank statements when they needed credit and saying, look, we can't responsibly lend you credit because you've got too much buy now, pay later all across your banking, because those lenders don't need to check what's going on with the consumer. They just give them the money. So we were thinking, rather than turning these people away under a responsible lending obligation that we have, that the buy now, pay later providers don't at present, rather than turning them away, how do we help them? We thought if we could give them a simple low cost option to originate them into our business, we can then start to talk to them about, paying back those loans they've got to that sector to enable us to then start to bring them into a lower cost environment. And, it's probably misunderstood, this claim that you're paying no interest in that buy now, pay later space when you're taking a loan. 20% of the revenue, I think, for those firms is coming through late payment fees and other fees. So, the legislation is very good in our regulated space of calling all of that out and being very transparent. So I think that will have to happen in that sector, but we can hopefully bring people into our business and then take them on a journey and help them recover from their overcommitment that they've got now, really, as a result of those products.
Do you know what, Sam? I love you saying that, because there are so many people that, quite frankly, are a little bit naive, and we live in a world today which is like the immediacy and the gratification and the consumerism. To hear that cash converters have got a product which is more like, let's have a look at your overall credit and let's try and make it a little bit better for you. Big tick from me on that one, Sam. Good on you. So Pay Advance, when did you launch it? What's it looking like from a growth point of view?
Yeah, it's been great. We piloted in ACT, a smaller market, where we could just test that the design was right and it was working as it was intended. So that was done about a quarter ago. We've gone to national launch. We're only just doing a national launch now, but the initial metrics are very interesting. We had a hypothesis would win new younger customers, way beyond our expectations. About 40% of the loans we've originated, we've done a couple of thousand now, 40% are new to business, under the age of 20. About 14% of the cohort are crossing into other products already, or even skipping this product, which is really interesting too, where we can get them into something longer term that's repaying over time. So helping the customer on that journey is really important. Helping them when we otherwise we have to take 90 days of banking and do a check and make sure it's responsible. I think we've solved that problem with a simple loan product. But really, Kerry, the line of credit we've been talking about, a personalised risk-rated product is where I really want to see our customers move to. So as credit profiles improve, we can bring down the rates and the cost of that credit. And I think that's sort of the end of the journey for our customers, where they get back into a more mainstream cost of credit environment and are enabled access to products that you or I might be that they haven't over time due to their credit profiles and the banks not being willing to lend. So hopefully that journey sort of makes sense, where we originate in and then take people into a lower cost, longer term, amortizing or drawdown facility.
Yeah, it's kind of helping people in the longer term understand that, they can get themselves into all sorts of trouble, but come across the cash flows, and we're going to try and work out a better way for you. What other products have you got coming down the track, Sam?
Yeah, I should just finish with, in 90 days, our customers could have over 800 single transactions on their bank statements to buy now, pay later providers. It's a massive issue. Yeah, like in 90 days.
Can you that past me again? 800?
Yeah, they could have over 800 individual line items of transactions. We've got many cases where it's exceeding 800 in 90 days. So you could just imagine small value, not necessarily large value, but high frequency, and it's alarming. So hence we've been contributing into the Senate reviews and trying to advise the government and provide that data to say, look, there's a real problem here.
Sorry, Sam. We will get to my next question about the new products, but that just blew my mind. 800 line items in 90 days. If the buy now, pay later sector gets cleaned up, so to speak, do you think that more people will migrate across to cash converter products? I'm looking for growth again.
Yeah, I absolutely do, Kerry, because I think if you think of the complexity to meet a responsible lending, an onerous responsible lending rule set in the legislation, which I completely agree with, you need very good scale technology, but importantly, you need that history of data on how an unsecured customer is going to perform to determine how much you can lend them, at what rate you should lend it to them at, and how you manage them through that journey. You don't want people falling over, experiencing hardship, for example.
Yeah.
None of that applies over in buy now, pay later. So if that was to come in and be extended to regulate that sector, by default we'll win. We'll win a lot of new customers through that process. I'm confident of that. So we've done that. We've built that. We operate under that framework now. It's probably a bit of a surprise to people when, you think about Cashies 10 years ago and you think about Cashies now. It's a very different tech-driven business. So huge growth prospects there. If we could win 10% of that 12 billion, I mean, it's game-changing for us. So I'm very excited about that prospect. But importantly, more focused on people being taken care of. And I've been in parliamentary hearings where I've been talking about that, and we might be viewed cynically due to some history or perceived high cost that we're addressing through our product set, and we need to do that, and we're carrying on doing that. But we're very careful about treating our customers with care and respect. I mean, this is a sensitive part of the economy. You really need to take care of your assessing and your decisioning to make sure you put someone in a better position. We're only approving 20% of our loan flow. I'd say Afterpay are giving 100%. I don't know, but we're only at 20% approval rates because of the checks and balances we've got in place to take care of our customers. So I think we're in a good position to win. Yeah.
All right. Talk to me about growth in new products. Got set because we talked Pay Advance. Have you got any other products?
We've got a line of credit product I touched on, which is a facility whereby for the first time in our market that I'm aware of, we'll be risk rating our customers, meaning based on your performance and your profile, we'll bring down your cost of credit, which is a big move for the industry, I think, and we're excited about that. We're looking at different products through our store network too, maybe like a consignment product where if you're looking to sell something, you might be considering eBay. You don't want to deal with the hassle of visitors at your house and all of that. We can put the store brand behind that. We could possibly attach a warranty. We could have the goods on display in our store. And if we sell the goods, we can, revenue share. There's some good ideas coming through that store network too for the first time in a while. now that we've got our nose above water and we're putting COVID behind us, there's some really good ideas coming through that network too, and lower cost store loans and different store offers, installments on high value jewelry, for example. Some of that stuff's coming through too. So it's a really modern business wrapped in a 35-year-old sort of shell, I think. So
Well,
as we
Sam,
break
all credit to you. I think you are changing the whole business, and as you say, you got into the tech and all that sort of stuff. So really interesting times. But as shareholders, 25-cent share price as I speak to you today. Talk to us. You've got a decent balance sheet at the moment. Dividends.
Yeah, look, we're committed to the dividend that we restated that in the first half of the previous financial year, 1 cent each half. So we paid 2 cents last year. We paid 1 cent first half this year again, and we're paying 1 cent second half. So 2 cents again this year, fully franked. I think we do have the balance sheet strength. Yeah. Balance sheet strength, obviously, with around 60 mil of cash is great, but the business produces a lot of free cash. So I think we're in a really fortunate position to consider, and having made a lot of the capital investments that we needed to over the past few years, turning the focus back on growing and acquiring where we can, but shareholder focus too, and those returns are really important to us. So
well, 2 cents on a 25-cent share price is about 9.5%, if I get my numbers right.
You can gross it up a bit with some tax and franking credits, and yeah, it's not a bad yield in this market.
Yeah, it's a good yield in this market. Sam, we're running out of time. Everyone knows I like to wrap this all up. Give us 3 reasons why people should be sitting up and taking notice of Cash Converters right now. I thought that was a great chat that we've just had, so there's lots of information there, but let's pull it into 3.
Thanks, Kerry. Yeah, well, hopefully, if we said, look, we're going from 150 stores in Australia to 200, we think based on our population mapping, we can support that and take our great model and great products to more customers to reach more, new markets, new customers, and grow our distribution network. I think that would be the first thing we're really focused on growing. I do think the pay advance product's really exciting when you hear about the number of new and younger customers that we're winning into our business. As we scale that nationally, we would expect that to continue, and we'll win a whole new customer set, a younger cohort that we can bring into our business through that new product and future new product. Finally, the dividend. I think, as I look at the power of the business, our free cash flow around 8.5 mil this year will be printed off a pretty tough year. The dividend, I think, will stay, and I'd love to just see our earnings grow, and the pressure on the board to consider what we do with those earnings, maybe considering a dividend increase. Who knows? We'll see.
Oh, I hoped you was going to say that, ladies and gentlemen. First on small caps. Sam, it's been great chatting with you. Congratulations on the new products, strong balance sheet, great earnings results that have come out, and I just think it's a great time for cashies, as you like to call it. I love that. And I really like the idea of that high-end one as well, because you know what? A lot of us have got stuff that we don't need anymore. And there's that ESG component, I guess, of people not throwing stuff out into landfill. Go and put it into a Cash Converters store and see what we can do with it.
Exactly. We bought 1.4 million items in the last 12 months. Let's make it 2 million. Stop that stuff hitting landfill, like you say, and repurpose it. Send it to someone who can get some use out of it. I think that's a great call.
Fantastic. Sam Budiselik, great to see you from Cash Converters. We'll chat again soon.
Thanks, Gary. Thanks for having me.